Hi, everybody. It's Bill Gilliland here, and welcome to Epic Entrepreneurs. And we are here to help you become an epic entrepreneur. So I came up with this idea of epic a number of years ago after studying success for a lot of years and having some failures and having some successes. And so the idea is that we want to I got four goals for this broadcast. The first, and it's around the acronym of EPIC, and the first is, hey, the E stands for education, so we want this to be educational. Secondly, we want to help you with your planning. We want to help you be a better planner. In these times of uncertainty, planning is more important than ever. And we want you to help you to find some inspiration to achieve the things you want to have. And C, we want to help you commit to reach your dreams and your goals. So today, we are going to cover some money mastery. And the truth is that money mastery is important because, look, money is the language of business. And so as a business owner, as an entrepreneur, you need to understand how to speak the language of business. You need to know how to communicate with your accountant. You need to know how to read your financial statements and understand how to make great decisions around them. And so we want to help you understand more about that. So the first step is to understand that there are three kinds of financial statements. Okay? And the first one is called a balance sheet. We're going to talk about the balance sheet today. Then next week, we're going to have a bit of a chat about the income statement. And then we're going to talk about the cash flow statement. And then we're going to talk about how they all fit together. So let's start. Let's jump in with the balance sheet. So what is the balance sheet and why is it important? Well, a lot of people get confused about the balance sheet. A lot of you don't even get a balance sheet as part of your financial statement. So a lot of you just get an income statement and you want to know and you want to run your business off of that. Well, you have to have all three. You have to understand the balance sheet. You have to understand your assets and your liabilities. You need to understand your income, where it comes from, how you make a profit, and then you need to understand how it comes together as a package. So let's jump in. Let's jump into what a balance sheet is. So what is a balance sheet? Well, a balance sheet, it has something on it called assets, it has liabilities, and it has something called owner's equity. Now, assets are just stuff. Okay? So assets are stuff. And liabilities are what you owe on your stuff. And when you subtract the two, you get something called owner's equity. And it's that simple. So let's draw it up on how a normal balance sheet looks. And we'll take a look at it from that standpoint of view. But it looks like this. Okay, this is going to be your balance sheet. Probably shouldn't identify it as BS but we'll call it the balance sheet. I'll spell it out so we don't get anything here. It's not BS. Okay, and so what you have over here on this side, you will have your assets. Okay? And this is the way it'll always look. You'll have, over here, you'll have your liabilities. And down here, you have something called owner's equity. And when you add them all up, the assets have to add up to the liabilities plus the owner's equity. So this has to be the same. They have to equal each other. Okay? So a lot of people say, well, why do I know? Now, there's a couple things you need to know about the balance sheet. The balance sheet needs to be, is a snapshot in time. It is on a specific date. So you want to get a balance sheet generally as of the end of something, like the end of the month or the end of a quarter or the end of a year. All right? So we want to get our balance sheet to equal out. So let's put some numbers in it and show it. So assets are stuff, liabilities are what you owe on your stuff, and then owner's equity. So let's actually look and get a real one that we can talk about. Okay? So we'll put some numbers in. So this is your balance sheet. All right. So for example, generally what they'll have is we'll have cash. We will also have accounts receivables. Okay? We'll have and then we'll have a few other things in there, like you could have some things that could easily be accessed, and these will be called current assets. Okay? So they'll have current assets. And then you'll have what's called long-term. So those are generally things that you could get a hold of in a year. Okay? So cash, accounts receivable, inventories, things like that. Then you'll have what's called, so you'll also have inventory, because you could sell that in a year, things like that. Okay? Then you'll have, so that's your stuff. Then you'll have the fixed assets, or long-term assets, sometimes they're called, like property, plant, equipment, things like that. Okay? Now, over here on the liabilities, you'll have what you call current liabilities, which will be accounts payable. Might have wages payable. You might have other things like that are generally going to be paid in a year. So then you'll have your current liabilities, and then you'll have your long-term liabilities. Then you'll have your long-term liabilities, which will be your something that's due more than, so longer-term notes, or so we call that long-term debt. Yep. And then you'll have down here, you'll have whatever it adds up to, which will be your owner's equity. All right, so if we put some numbers in there, let's say you have cash of $100,000. Let's just say 50. And let's say you have accounts receivable of $150,000, and you have inventory of $300,000. Let's say, so this might add up to $500,000. Let's say you have another $1 million in fixed assets. And so you're going to have, down here under your totals, you're going to have $1,500,000. Okay? Let's say on your accounts payable that you owe $100,000. Okay? And we're not going to get into that. So you're going to have your current liabilities are going to be $100,000. Okay? And then let's say you have long-term debt of, we'll call it $800,000. Okay? So your total liabilities are going to be $850,000. So there'll usually be a line called total liabilities. That'll be $900,000. Okay. So your owner's equity has got to be $600,000. Because it's got to add up to $1.5 million on both sides. Now, in your owner's equity, there'll be things like the initial capital you put in your business. There will be other things that, like, net profit. There'll be a lot of other things in there, but basically, this is how your balance sheet works. Okay? There'll be, your profit shows up here. Your because it goes into your owner's equity. Okay? Distributions would go out of there. So there's a lot of things, but basically this is how it works. You got the basic balance sheet. You got stuff. This is all your stuff. Trucks, anything over here, and then you've got the things you owe on your stuff, which in this case was your stuff is $1.5 million. What you owe is $1.5 million. So your owner's equity is $600,000. And that, my friends, is the balance sheet. And you need to understand your balance sheet because we want to take and make this better. So we want our total of our investment to go up. So the more, and look, businesses are not necessarily, this is what we call book net worth, $600,000. That's your book net worth. But, so businesses are not going to necessarily be valued at what the book net worth is. But it stands to reason that if we increase our book net worth, then we're going to be, then our actual net worth or our market value is going to go up as well. So I hope this has been useful. I hope you found it fun. This is the balance sheet. This is how you use it. If you're going to be an epic entrepreneur, if you're going to build a business, you got to understand money math. And the first step to understand money math is to understanding how to use your financial statements and how to make decisions based on it. We'll get to that a little bit later, but first you got to understand what a balance sheet is. Next week we'll be hitting on the income statement. Now, if you've learned so much in 12 minutes, imagine what we can do in a year working together. Or imagine what you could do if you jumped on and signed up for our Action Club, which is a 7-session, 14-week course that's going to teach you everything you need to know about becoming an entrepreneur, everything you need to know about business. We go into sales, marketing, mindset, culture. We go into finance. We go into operations. We go into pretty much everything you're going to need to know to build a great base upon which to build your business. Now, I hope you've enjoyed this, and until next time, all the best.